Non-liability for actions or inactions of contractor, defining responsibility while maintaining supervision. As we conclude the independent contractor agreement, we now address one of the most important legal concepts in brokerage operations, liability. While independent contractors operate with a level of independence, brokers cannot fully eliminate responsibility for their actions. Most ICA agreements include language stating that the contractor is responsible for their own actions or inactions. However, under AAC R4281103, the broker still has a duty to supervise all licensees. This means that while the ICA can allocate responsibility, it cannot override statutory obligations. Example, an agent fails to disclose a material defect. Even if the ICA states the agent is responsible, the broker may still face liability for failure to supervise. In 2026, the ICA can reduce risk, but it cannot eliminate broker responsibility under Arizona law. 1099 certificate, proper classification and tax reporting. Independent contractors in real estate are typically classified as 1099 contractors for tax purposes. This classification reflects that agents are not employees and are responsible for their own taxes, expenses, and financial planning. Brokers must ensure proper reporting of income through IRS Form 1099 NEC and maintain accurate records of all compensation paid. Example, a brokerage fails to properly issue 1099 forms for agents. This may result in IRS penalties and potential audits. This ties directly into earlier sections on the annual 1099 report and reinforces the importance of accurate financial reporting. In 2026, tax compliance is a critical component of brokerage operations and must be handled with precision. Transfer of listings, ownership, control, and broker authority. Listings belong to the brokerage, not the individual agent. When an agent leaves a brokerage, the handling of active listings must be clearly addressed. The ICA should define whether listings remain with the brokerage, conditions under which listings may transfer, required client consent for any transfer, broker approval for reassignment. An agent leaves the brokerage and attempts to take listings without broker approval or client consent. This may result in disputes and potential legal action. Under Arizona law and standard practice, the broker maintains control over listings, reinforcing the importance of clear policies. Confidential information, protecting client and brokerage data. Confidential information is one of the most valuable and sensitive assets within a brokerage. This includes client data, transaction details, financial information, and proprietary business practices. Under AAC R4281101, agents must protect confidential information and avoid unauthorized disclosure. The ICA should reinforce confidentiality obligations during and after the relationship, restrictions on use of client data, security requirements for handling information. Example, an agent leaves a brokerage and takes client contact information to use at a new company. This may violate confidentiality provisions and lead to legal disputes. In 2026, with increased focus on data security, protecting confidential information is both a legal and ethical obligation. Broker prohibition on solicitation of employees and contractors of broker, maintaining stability. To maintain stability within the brokerage, ICA agreements often include provisions restricting the solicitation of other agents or employees. These provisions help prevent disruption of operations, protect team structures, and maintain brokerage culture. Example, an agent leaves and actively recruits multiple agents from the brokerage to join a competing firm. Without a non-solicitation clause, the broker may have limited recourse. While enforceability may vary depending on the circumstances, these provisions are an important risk management tool. Non-solicitation of customers, clients of broker, protecting business relationships. In addition to protecting internal relationships, ICA agreements often address the solicitation of clients. These provisions are designed to protect the brokerage's client base and business interests. The ICA should clearly define restrictions on contacting past or current clients and duration of non-solicitation provisions. Permitted and prohibited activities. Example, an agent leaves the brokerage and immediately contacts all past clients to solicit business. This may violate the ICA and lead to legal action. In 2026, clear boundaries around client relationships are essential for protecting brokerage value. Section Review. Final integration of the independent contractor relationship. This final section of the ICA brings together the legal, financial, and operational elements that define the broker-agent relationship. It reinforces that while agents operate independently, they remain part of a structured and supervised brokerage system. We now see how this completes the course. Supervision remains the broker's responsibility. Agreements define expectations and reduce disputes. Financial reporting ensures compliance. Listings and clients are protected assets. Confidentiality safeguards trust and professionalism. Non-solicitation provisions protect business stability. The ICA is not just a contract, it is the blueprint for how your brokerage operates. Termination, ending the relationship while protecting the brokerage. As we arrive at the final section of this course, we return to a concept that ties together supervision, agreements, and risk management. Termination. Ending the broker-agent relationship must be handled with precision, documentation, and adherence to both the ICA and Arizona law. Termination provisions should address notice requirements, handling of pending transactions, distribution of commissions, return of company property and access, client communication, and reassignment. Under AAC R428-1103, the broker remains responsible for transactions initiated under their supervision, even after an agent's departure. An agent leaves the brokerage mid-transaction and fails to communicate with clients. Without a clear termination policy, the transaction is disrupted, creating liability for the broker. Termination is not the end of responsibility. It is a transition that must be managed carefully. Controversies. Resolving disputes professionally and legally. Disputes are inevitable in real estate, but how they are handled defines the professionalism of the brokerage. The ICA should establish clear procedures for resolving controversies. Ethical grievances. Ethical grievances often arise from conduct issues between agents, clients, or cooperating brokers. These may involve violations of professional standards or brokerage policies. Example, an agent misrepresents information during negotiations. This may result in an ethics complaint and potential disciplinary action under ARS Section 32-2153. Grievances concerning this contract or otherwise disputes related to the ICA itself, such as compensation, responsibilities, or policy interpretation, must be addressed through defined processes. Example, an agent disputes their commission split based on a misunderstanding of the ICA terms. Clear language and dispute procedures help resolve the issue efficiently. Disputes involving contractors. Conflicts between agents within the same brokerage are common and must be managed by the broker. Example, two agents claim entitlement to the same client. Without clear policies, the dispute escalates and impacts the transaction. In 2026, structured dispute resolution processes are essential to maintaining professionalism and minimizing risk. Disputes involving commissions, protecting the most sensitive area of brokerage operations. Commission disputes are among the most common and contentious issues in real estate. The ICA must clearly define how these disputes are handled. Origin of fee. The concept of procuring cause or origin of the fee is often central to commission disputes. Determining who initiated and carried the transaction forward is critical. Example, two agents claim they were the procuring cause of a sale. Without documentation, resolving the dispute becomes difficult. Contractors' rights regarding fee disputes between contractors. Agents must understand their rights and obligations when disputes arise within the brokerage. Example, an agent files a claim against another agent for a portion of the commission. The broker must evaluate the claim based on policy and documentation. Contractors' rights regarding fee and arbitrations with persons or entities outside of broker disputes may also involve outside parties, such as cooperating brokers. These may be subject to arbitration through professional associations. Example, a cooperating broker claims entitlement to a commission. The dispute may be resolved through arbitration rather than litigation. Commissions, final authority, and oversight by the broker. All commissions must be handled in accordance with Arizona law, specifically ARS 2255, which requires that compensation flow through the employing broker. The broker maintains final authority over distribution of commissions, resolution of disputes, and compliance with agreements and policies. Example, an agent attempts to negotiate a commission directly with another party without broker involvement. This is a violation and may result in disciplinary action. Collection, broker responsibility for receiving compensation. The broker is responsible for collecting all commissions and ensuring proper distribution. This reinforces the broker's central role in all financial aspects of the transaction. Example, a client attempts to pay an agent directly. The broker must intervene to ensure compliance with statutory requirements. Collection is not optional, it is a legal requirement. Unpaid commissions, managing risk and expectations. Unpaid commissions can arise due to disputes, transaction failures, or client non-payment. The ICA should address how these situations are handled. Example, a transaction closes but the commission is disputed or delayed. Clear policies help determine how and when payment is resolved. In 2026, brokers must have clear systems in place to manage and track unpaid commissions. Severability, protecting the agreement as a whole. Severability ensures that if one part of the ICA is found to be invalid or unenforceable, the remainder of the agreement remains in effect. A non-solicitation clause is challenged and deemed unenforceable. The rest of the ICA continues to govern the relationship. This provision protects the integrity of the agreement. Assignment and delegation, controlling transfer of responsibilities. Assignment and delegation provisions define whether and how rights or responsibilities under the ICA can be transferred. Example, an agent attempts to assign their responsibilities to another individual without broker approval. This may create confusion and compliance issues. Brokers must maintain control over who is authorized to act within the brokerage. Modification, keeping agreements current. The ICA should include provisions for modification to reflect changes in law, policy, or business practices. Example, new ADRE rules are implemented in 2026. The broker updates the ICA to ensure compliance with updated regulations. Flexibility ensures the agreement remains relevant and enforceable. Waiver of breach, enforcing policies consistently. A waiver of breach provision clarifies that failure to enforce a provision in one instance does not waive the right to enforce it in the future. Example, a broker overlooks a minor violation once, but later enforces the policy. The waiver provision protects the broker's ability to enforce rules consistently. Consistency is key to maintaining authority and compliance. Binding effect, ensuring continuity and enforceability. The ICA binds both the broker and the agent, as well as their successors or assigns, ensuring that the agreement remains enforceable over time. Example, a dispute arises after an agent leaves the brokerage. The binding effect ensures that the agreement still applies. Office policy and guidelines, the living framework of the brokerage. The ICA works hand in hand with the brokerage's office policy manual. Together, they create a comprehensive framework for operations, compliance, and expectations. An agent violates a brokerage policy outlined in the manual. The ICA reinforces the requirement to follow those policies. Policies and agreements must work together to create a consistent and enforceable system. Recovery of expenses, financial accountability within the brokerage. The ICA should address how expenses incurred by the brokerage on behalf of the agent are recovered. Example, the brokerage advances marketing costs for an agent. The ICA outlines how those costs are reimbursed from future commissions. Clear financial expectations prevent disputes and misunderstandings. Addenda and exhibits, expanding the agreement for specific needs. Addenda and exhibits allow the ICA to be customized for specific situations, such as commission plans, team structures, or special programs. Example, a team agreement is included as an exhibit to the ICA, outlining additional responsibilities and compensation structures. This flexibility allows the brokerage to adapt while maintaining structure. Section review, final integration of the entire course. This final section brings together every concept covered throughout this course, reinforcing that a successful brokerage is built on structure, clarity, and compliance. We now see the complete picture. Supervision is the broker's core responsibility. Policies create consistency and accountability. Documentation protects every transaction. Financial systems ensure integrity. Agreements define relationships and expectations. Risk management prevents problems before they occur. From the first section to this final moment, the message remains the same. A strong brokerage is built on strong systems. Online discussion. Why is termination management critical to broker compliance? Answer. Because the broker remains responsible for transactions and must ensure continuity and proper handling of client relationships. What is the most common source of disputes in real estate brokerages? Answer. Commission disputes, often related to procuring cause and unclear agreements. Why must office policies and the ICA work together? Answer. Because they create a complete framework that defines expectations, enforces compliance, and reduces risk.